warm welcome to this week's video update. My name's Scott, and this is a video update on the wholesale markets and market movements. It is Friday, the 7th of October, and I'll be firstly taking you through those wholesale price changes, looking at the graphs, and then I'll be looking at what's happened over this week and last week and what we can expect for the week ahead. So let's begin with the wholesale movements. We'll start with gas, and I'm pleased to say we have seen prices come down week to week by over 10% or more, depending on the contract length. And you can see that on the left-hand side, those exact figures. On the right-hand side, you can see it in a graph format, and you may notice that yesterday prices did go up 9% or so. So that 10% drop or so is despite a significant rise yesterday in wholesale prices. Markets are trading around half the valuations they were at all-time high levels that we saw at the end of August. And really, they're quite delicately poised now entering the winter. There is plenty of scope for them to run lower, and there's plenty of room for them to run higher again. So the coming weeks and months will tell what happens. There's certainly many drivers out there that could influence it either way. We have seen a bit of volatility in the market as well. So you'll see that in the graph that there are quite some wide swings happening again of over 9% as we saw yesterday. So volatility is starting to return into the markets. Quick look at power, you'll see prices have come down week to week as well, although not to the extent gas has. So anywhere between 4.6 to 6.7% there. Again, yesterday saw a notable increase of 6.3%. And just like gas, it's in a similar kind of position, trading around half the valuation it was at those all-time high levels. You will notice prices are significantly up to where they were at the back end of spring, beginning of summer, so about 3-4 months ago. So what's happened over the last week? I've picked out 3 things that were most significant really in affecting prices. Firstly, the EU are on the verge of 90% storage levels, which is really good news. They hit the 80% target at the beginning of September, which meant they had another 2 months or so to kind of get to that 90% level before November begins. So they're on the verge of hitting 90%, they're at 89% right now, and I expect in the next few days that target of 90% will be hit, which places the EU in a much better position for the winter. It has more of a buffer than it would have expected. Next is quite a bullish factor on the markets, certainly on the oil commodity anyway. OPEC met this week, widely expected to cut production. That doesn't come as a surprise, but the actual extent of that production cut has come as a fairly surprise to the market. So they'll be cutting production by 2 million barrels a day, which was unanimously agreed. Oil over recent weeks has been declining in valuation through a host of different reasons. So it's getting as low as into the low 80s region. Thanks to this and speculation of the cut, Brent has, for example, traded back up to $94 a barrel, where it was hovering kind of for a period of time. So yeah, we've seen a big increase in oil prices over the last week or so. And that could play a factor into gas and power prices. And finally, quite a big news, Nord Stream 1 and 2, I'm sure you've all seen, have been damaged. I don't want to speculate too much on here because a lot of it is speculation on who, how and why it was all done. But what is confirmed is it looks pretty certain that this was caused by detonations and explosives on the pipelines from all the information and surveying kind of conducted. What this ultimately means? Well, you have to factor in 2 questions here. So it does mean even if Russia wanted to flow gas into Europe now, they're going to find that almost impossible to do that on those pipelines. But the other factor is those pipelines were already suspended and not flowing any gas in the first place, and Europe were already moving and transitioning away from Russian sourced energy. So what impact would that have long term? You could argue either way there. But one interesting thing Gazprom have said is they do kind of theorize and speculate that Nord Stream 2 can still flow at 25% capacity. Now Nord Stream 2 was nowhere near being resumed, being completely suspended. But in different scenarios, if relationships do repair, that could become a possibility. But in all likelihood, it's very unlikely we'll see gas flowing through that pipeline anyway. So yeah, those were three big events really that happened over the last week. It was quite a big week in the markets. Looking at next week, we got three things to look out for. So firstly, all month really, we've got a high amount of LNG deliveries arriving. So 9 are expected for the rest of the month. And we'll no doubt see a few of those start to dock from next week, which will help bring supply into the UK. Next is EDF will be beginning their nuclear fleet restart. So this is expected to start in October and continue all the way through to December, perhaps even early 2023, which is good. It's going to bring supply back online for France and help the European picture. So I expect this won't be the first time for the next 3 months or so I'll be talking about EDF restarting their nuclear fleet. And then finally, it's predicted next week to have above seasonal temperatures. So all the way up to the 14th of October, we should have temperatures which are pretty much in line with seasonal average. And then from the 14th, temperatures are expected to lift by about 3 degrees on average in the UK. So that could help ease demand and delay kind of heating coming on in the UK. So yeah, that is bearish potentially on prices there. As always, further information is available on our website, and we do have the Market Watch Live team which you can chat to, which is again found on our website. The URL is just shown there below. So thank you for watching. I'll be back again next week for a further market update. Thank you very much. Take care.